Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh.
Hello everyone.
My name is Muhammad Fadil Syakir bin Muhammad Jamaluddin.
My name is Muhammad Isyamuddin bin Umar. We are from Malaysia. Previously, our degree is on Trust Economy.
And currently, we are studying in Master Islamic Finance and Banking in UM. Do you know where is UM?
Uni utama ibu yang tercinta, kami doa lanjut usia bahagia. Kami janji hormati pesanmu, ilmu budi dan bakti. Insan Tuhan membara langit biru mencari ilmu, berteman kebudimanan, bina nusa bina dunia sejahtera. Uni utama ibu yang tercinta, kami doa lanjut usia bahagia. Kami janji hormati pesanmu, ilmu budi dan bakti, ilmu budi.
Hi, we are back. Syakir.
Yes.
So, what's the topic that we are going to discuss today?
Okay, today we are going to discuss about trade financing.
Oh, trade financing. So, can you explain briefly about trade financing so that everybody know?
Actually, trade financing is under corporate financing.
Yeah.
Corporate financing is divided by three, which is term financing, working capital financing, and also trade financing. Actually, but due to the limited of time, we just focusing on the trade financing. Trade financing is divided by 6, and you can see that ILC, ITR, ISG, IAB, IBG, and also IECR. This ILC, ITR, ISG will be
Explain by me.
and this three will be explained by me.
Okay, Syakir. ILC stand for Islamic Letter of Credit. The ILC is an undertaking issued by the Islamic Bank on behalf of buyer and for the account of buyer of goods. Okay, the features of ILC. Islamic Bank as an issuing bank will undertake the bill of exchange and trade the document of seller when the document is presented according to the term and condition.
Oh, I see. So what is the Sharia principle used by ILC?
Okay, the Sharia principle used for ILC is wakalah and murabahah.
Oh, would you explain the how the what we call it, the way the flow of the
Fund.
the flow of the fund,
Okay, the flow of the fund. Okay, for wakalah ILC, the fund from customer or buyer.
Okay.
And for murabahah ILC, the fund is from Islamic Bank through financing.
Oh, I see.
Yeah.
Then,
Yeah.
what is the modus operandi for the ILC? And what according to the principle that you have told to me,
Yeah.
which kind of principle used and what are the modus operandi?
Okay, I will explain about wakalah of ILC modus operandi. Next, we continue with the modus operandi of Islamic Letter of Credit. The modus operandi of wakalah ILC. There are 7 steps of this modus operandi. First, the customer with an LC issuance facility apply for an ILC and places deposit with the Islamic Bank. Second, The Islamic Bank issue the LC and collect LC issuing commission. Third, number 3, the advising or confirming bank in the beneficiary country advises the LC. Number 4, the beneficiary submit the document under LC to the negotiating bank. Next, number 5, the negotiating bank present the document under the LC and claim the reimbursement. Number 6, if the documents are in order, the Islamic Bank settle the claim less any charges. And the last part, the beneficiary ship the goods to the customer. Okay, now we continue with the real example of ILC in the bank. I choose the example in CIMB Islamic. Okay, the name is Standby Letter for Credit I. They give the explanation also, which is a written undertaking by the bank to the beneficiary at the request of the applicant, and also its purpose. And they use also the Sharia principle of wakalah, which refer to an agency a relationship where one party is appointed to act as an agent on behalf to another party. And they give also the benefit for standby letter of credit I, which is assurance, secure better trade terms, and also certainty. Okay, they also give the requirement, which is all customer with bank guarantee requirement, and also fee and charges for the customer. So this is the example of the ILC. If you want more information, you can visit this CIMB Islamic website. Okay, Syakir. My next explanation is on the ITR.
Oh, actually what is ITR means?
Okay, first I will the ITR stand for the Islamic Trust Receipt.
Oh, could you continue?
Okay, Islamic Trust Receipt is a financing facility that finance the domestic and international trade document drawn against the ILC. Okay, this facility extended by the Islamic Bank to the customer for the financing of his purchase or import. The ITR is a document of trust signed by the customer in which the bank allow the customer to get the release of goods and to make the necessary payment at a future date.
Oh, okay. Actually what the principle used like?
Okay, the Sharia principle used for the ITR is murabaha, which is
You mean cost plus profit?
yeah, cost plus profit, and the source of fund is through murabaha also, which is come from Islamic Bank through financing. So I will explain to you about the modus operandi of the ITR for the import and local purchase.
Oh, okay. But don't forget to include this the material.
Yeah, after that I will include the example.
Just like previous one.
Yeah.
Okay.
Okay, next the modus operandi for ITR, Islamic Trust Receipt. There are 5 steps in modus operandi of ITR. First, the Islamic Bank appoint the customer as its purchasing agent. The second one is the customer buy good from the seller as the Islamic Bank agent. Number 3, the Islamic Bank pay the seller the purchase price. Number 4, the Islamic Bank sell the good to the customer based on the trust receipt with a 90-day tenure. And last, number 5, the bank will receive a profit from customer at a maturity date. This is calculation for ITR. Okay everyone, now we continue to the next trade financing, which is ITR. The rate example I also take from CIMB Islamic Bank, which is the trust receipt I. Okay, the explanation is a short-term trade financing facility offered to customer to finance the purchase or import of good. Okay. This trust receipt I use murabaha Sharia principle. Okay. Also, they give the benefit of this trust receipt I (TRI), which is deferred payment basis, agree payment date, flexible currency option, and also reduced forex exposure. And also the eligibility is buyer and importer of domestic purchases and imports. And also they also state the fees and charges for this trust receipt I. So this will be the one of the example in the real bank in Malaysia for ITR Islamic Trust receipt. Okay, Syakir. I will continue explain about the ISG.
Oh, what SG?
Okay, actually ISG is a Islamic shipping guarantee, which is it is an indemnity issued by the Bank Islam on behalf of the importer and for the account of the importer of goods to the shipping company or his agent. Okay, Syakir, the ISG is a letter of indemnity to owner or agent or master of the vessel for delivery of goods without presentation of the document of title of goods, which is without the original bill of lading. Okay, ISG also can only be used in connection with the import transaction under the ILC that I have explained before, established by the Islamic Bank.
Oh, what you have explained, I understand.
Yeah.
What is the Sharia principle used for the ISG?
Okay, the Sharia used for ISG, the Sharia principle used for ISG is kafalah.
Oh, kafalah.
Yeah,
Name
kafalah.
guarantee.
Guarantee, yes,
Oh,
name
okay.
guarantee. And then next I will explain the modus operandi for the ISG.
To be more clear, right?
Yeah, to be more clear, and also the example in banking in Malaysia also, which is the IMB. Now the modus operandi for the Islamic shipping guarantee. There are 5 steps in Islamic shipping guarantee modus operandi. First, the customer requests issuance of an ISG. Second, the Islamic Bank issues the ISG. The third one, or number 3, the customer present the ISG to the beneficiary. And step number 4, the beneficiary release the good to the customer. And last, the customer redeem the ISG from the beneficiary and return the ISG to the Islamic Bank for cancellation. This is the calculation ISG commission. Okay, next the example for ISG, Islamic Shipping Guarantee. I also take from CIMB Islamic, which is Shipping Guarantee I. They also explain about the Shipping Guarantee I, which is an indemnity given by the customer, countersigned by the bank to a shipping company or its agent to allow the shipping company to release the good to the customer without the presentation of the original bill of lading. Okay, the Sharia principle for shipping guarantee I is kafala, which refer to contract of guarantee or surety given by one party to discharge the liability of the third party in the case of default. So the benefit of shipping guarantee I is faster turnaround time, which is take delivery of good immediately, cost saving, and also improve cash flow, which is sell the good without delay. So the eligibility for this shipping guarantee I must be the importers. This is they also give the fees and charges for the importers. So this is the example, the real example of ISG, Islamic Shipping Guarantee, in the bank, which is the IMB Islamic.
Assalamualaikum warahmatullahi. Okay, I will continue to the. Okay, before that, my friend they already explained about ILC, ITR, and also ISG. So now I will continue to the IAB.
Okay, Shakir, what is actually IAB?
Oh, actually IAB is acronym for Islamic Accepted Bill.
Okay, can you explain more about IAB to me?
Actually, IAB is a thing that come from the receivable or the payable from the customer in Islamic banking that actually may arise from the open account trade or the wakalah bill for the collection also or the ISC transaction. And for the IAB, actually they are divided into two, which is firstly is IAB import and local purchase, and the secondly is IAB export and local sale. So that means IAB, first IAB is for the purchase, and the second IAB is for the sale.
Okay, can you explain to me more about both two?
Okay, of course, why not? Okay, I will explain about IAB import, or known as the purchase IAB. Actually, IAB is a bill of exchange drawn by the customer to his order and accepted by the Islamic Bank and the payable on the specific future date. Okay, this means that it is a financing. It is financing that fall in the category of murabahah capital financing that is similar with ITR that I explained by you. Actually, it's quite similar. Yeah. Okay. Okay. Same goes with other financing. Actually, the duration of the debt can be securitized into the bill of exchange, whereby the bank can sell it into the third party.
Oh, okay. Could you explain more about the modus operandi of the IAB to me?
Okay, why not? I will explain to you the modus operandi and also the calculation. Okay, now I will start the modus operandi for Islamic acceptance bills from import and local purchases that using the murabaha concept. Okay, this is the modus operandi for the Islamic accepted bill, import and local purchases. Actually, this modus operandi for the Islamic accepted bill is similar with the Islamic Trust receipt (ITR) that have been presented by Din So I will not explain further. Okay, next we will continue to the real example that given by Bank Islam. As you can see here, Bank Islam offer ABI, known as ABI. It is a financing facility grant to you to finance your purchase of durable goods that include raw materials, semi-finished and finished goods. Okay, for this accepted BI, ABI in Bank Islam, the benefit of Bank Islam is, as you can see here. Okay, next I will I will go to the example, the real example for the CIMB Islamic. CIMB Islamic also offer the purchase acceptable purchase, or known as acceptable I. It is acceptable is a financing facility extended by the bank to a customer to finance his purchase or sale. The purpose you can read here, and the principle used for this acceptable I is a murabaha. The benefit here is a cost-effective alternative mode of financing, less paperwork, and the eligibility of and requirement. You can see here the fees, charge, and so on. Okay, next we will continue to the IAB export, or known as a local sale. Okay, for this IAB export, it exists because sometimes the customer require financing that can finance their receivable. Okay, actually IAB is a bill of exchange drawn by the bank to order and is accepted by the customer and payable on the specific future date. Okay, the differences between this instrument, I mean the
IAB export.
Yeah, IAB export compared to the IAB import is the IAB export is drawn by the bank, whereby IAB import, or known as a purchase, is drawn by the customer itself. Okay, for the IAB, this IAB actually to fulfill the gap between the sale and the actual receipt of the payment. So in other words, that the customer want the money first, so they approach the bank.
Okay. So how? What is the Sharia principle used in this IAB export?
Okay, the Sharia used by the bank is the buy-and-dine.
Okay.
Okay, buy-and-dine, they will use buy-and-dine with the discount price to get the profit. Compared to murabaha, they will use murabaha to get the what we call it?
Cost plus profit.
Yeah, cost plus profit. For buy-and-dine, the profit will get with the discounted price. Okay, for the IAB export, it used buy-and-dine. For the IAB import, or known as purchase, we use the murabaha. Okay, next I will explain to you the modus operandi and also the. Okay, next I will explain about the modus operandi Islamic accepted bills, spot and local sale. This kind of use buy and then concept. Okay, firstly, Party A will sell the commodity to the Party B on the deferred payment basis. Secondly, Party A applies to the Islamic Bank to discount the receivable under the bank accepted bill facility. Number 3, the Islamic Bank discount the receivable under the buy-and-dine principle and accept the bill of exchange drawn by the customer and markup and added the markup price. Number 4 is the Islamic Bank will receive commission from the customer at maturity date. Okay, this is an example of calculation. Okay, next is about the accepted bill for sale. Here actually the Bank Islam show in the same page So as you can see here, ABI sale is known as a financing facility granted to finance your sale or export of goods on the credit term that include raw material, semi-finished and finished good. Okay, as you can see here, the benefit is same as AB purchase. Okay, so let's go to the CIMB Islamic. Okay, CIMB Islamic also offer the accepted BI for the sale. Okay, the Sharia principle used in accepted BI in CIMB is buy a dine, which is known as discounted. Okay, but the benefit for this is a cost-effective alternative mode of financing, less paperwork. So the eligibility, you can see here the fees charge. Okay, for more detail, I think you can try to Google this. Continue about Islamic Bank guarantee, known as IBG. Okay, actually IBG is an irrevocable obligation in the form of writing undertaking of the Islamic banking to pay an agreed sum if the third party default. Okay, the guarantee, there are 9 guarantees that have been stated in this book, which is firstly is the tender guarantee, performance guarantee, guarantee in subcontract, guarantee in lieu of security deposit or special guarantee, and 5 is guarantee for exemption of custom duty, 6 is guarantee for maintaining ledger account, and 7 custom bound, 8 warranty maintenance, and last one is the advance payments. Okay, most of the IBG use kafalah as a Sharia principle. However, some scholars say that this kafalah applied by the bank is against Sharia because the bank apply fees. This is not acceptable according to them. So that's why they come out with the hybrid one, which is they combine the wakalah with al-istimar, or known as investment agency, and the kafalah itself is guaranteed as well as profit.
Okay, so the hybrid is the combination of wakalah and kafalah.
Yeah, they combine these two both.
Yeah.
However, most of the bank that I searched in the internet, they use a kafalah because according to what I read, kafalah is easier for them and they're not riskier compared to the investment agency combined with the kafalah. Okay. So next I will explain about the modus operandi by using kafalah. Specifically, Bank Islam using wakalah. So I will explain the modus operandi and also the calculation. Okay, this is a modus operandi for the Islamic bank guarantee that based on the kafalah principle. Okay, firstly, the customer requests issuance of an IBG from the Islamic bank. Number 2, the Islamic bank issue the IBG to the beneficiary based on the kafalah principle. Number 3, party to the contract perform service and or honor the underlying contract. Number 4, upon the completion of the contract bearing any claims, the IBG is returned to the Islamic bank. In the event of any claim, the Islamic bank will make payment to the beneficiary. The Islamic bank will then either debit the customer account or uplift the customer deposit held with the Islamic bank. Okay, this is a calculation IBG commission. Next, I will show to you the real example for the bank guarantee. Here, I look at the Bank Islam website. They offer the bank guarantee, or known as BGI. Actually, BGI is irrevocable written obligation issue under contract of kafalah by the bank to ensure payment in case of demand by the beneficiary. The bank is in turn act as a guarantor. Okay, the benefit for this, as you can see here. Okay, next I will show to you the CIMB, the real example for the CIMB. In CIMB, also known as BGI. Okay, the purpose of this, as you can read here, okay, they also use the same principle as Bank Islam, which is known as kafala. The benefit for the CIMB BGI is assurance, secure better trade terms, and requirement. You can see here. Okay, what is the fees and charge? You can see here. Okay, for more detail, I think you can try to Google this website. Okay, next I will explain to you and all of us is about export credit refinancing. Okay, for what I found is export credit financing is the alternative short-term post-shipment financing to direct or indirect exporter to promote export of the manufactured good, agriculture product, for primary commodity and so on. Okay, what I found before that, this export credit refinancing is also can be securitized in the place of exchange. As I mentioned before, when you can securitize it, in that you can sell it to the third party. Okay, what I found in my study, I found Bank Islam offer this kind of instrument. It offer two, which is the ECRI, free shipment, and also ECRI, post shipment.
Okay, Syakir. What is the Sharia principle used for ECR1 free shipment and ECR1 post shipment?
Okay, for the ECR free shipment, before shipment, we use the murabah concept. Same goes with the others that we have been discussed today. Murabah, whereby we will gain with the cost plus profit. Okay, if after the shipment we use the bank, whereby the bank get profit through the discounted price.
Okay, Syakir. I think we have already explained think of an instrument in trade financing.
Really, you finished?
Yeah. So I will make a bit of conclusion for overall. Okay, recently the Islamic Bank has been emphasized on offering instrument based on tawarruf or community murabah. Okay, the shift of from a community to community murabah has arisen after the concern about the use of buy al dine, actually, because buy al dine, which is the discounting of debt for cash, is not permissible by some of the Sharia scholars. But this community murabah involves the contract of sale and purchase of underlying asset to facilitate the need for cash of the customer, especially to support export and local sale.
Oh, so you mean that before we more apply the time, but now more to the community murabah due to the some issue arise in time.
Yeah. So I hope everybody can understand and clear about this trade financing. Thank you.
Thank you.